Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I was scrolling through Twitter. I'm going kind of back and forth with Rob Keents on this is the question that he asked. If you didn't see my live stream yesterday, I polled the viewers, what is your prediction for the housing market in 2022? And I put down soar. It says 20% up. I don't know if it's going to be 20%, but it's going to go up more than probably 10%. So I would say between 10 and 20% is probably my guess that a lot of areas will see. And his, I guess, rebuttal is sure, at current bank rates, rising interest rates changes the narrative. The biggest factor in real estate prices in aggregate is interest rates and affordability. The Fed is raising interest rates and we have high inflation, which will also affect retail housing costs. And I would disagree. The biggest factor is not interest rates and affordability. It's supply and demand. And your affordability will go down when you have a supply-demand imbalance. When demand far exceeds supply, then you have prices that go up. And if your supply demand is so out of whack, what's going to happen is you're going to have homes become less affordable, irrespective of what the interest rates are. Irrespective. Your interest rates, I mean, sure, they may have an impact on affordability. But when your supply demand goes way out of balance, that's when you have problems. And then it's the cost of new supply to come and replenish your inventory that's been depleted. So since 2010, 2011, our inventories have been depleted. They've been coming down and down and down and down. And we are at very low levels, irrespective if they bounce up and down a little bit. We are at very low levels for inventory in real estate. Now, real estate isn't like a speedboat. It just doesn't turn around and reverse. This takes years to turn around. This is like the Titanic trying to move. It's a big ship and it can't move very fast left or right. So when the momentum in the housing market gets going, it just keeps going. It doesn't just stop and turn around. And in my opinion, the housing market is pushing and pressuring the Fed to raise rates. There's fiscal spending that's going on, and then there's also, behind it, bank lending. And those are the two things that impact inflation, bank lending and spending by government. I put a thing in here, 5 million more homes needed in the US and what investors need to know. If we look at some of these articles and stuff, and I'm just doing this, it doesn't really matter to me what they necessarily think, but Zillow changes its 2022 real estate outlook. Here's what it says to expect from home prices next year. And what they say, it says this: clearly bad news for stretch home buyers. While climbing at a 13.6% would count as declaration from current levels of price growth, prices were up a record 19.9% between August 2020 and August 2021. It'd hardly be price relief. The strong long-term outlook is driven by our expectations for tight market conditions to persist, with demand for housing exceeding the supply of available homes. In other words, what they see, the tight and competitive housing market spurred by a perfect storm of pandemic factors and demographics. The perfect storm of pandemic factors and demographics. Continuing into 2022, there simply won't be enough homes for sale next year, according to Zillow's forecast model, to satisfy the demand from WFH buyers and the wave of millennial first-time buyers. Year-over-year changes in the S&P CoreLogic Case-Shiller Home Price Index, and it's ramping up. Now, do I think it's going to be this high? Maybe not. I think 10 to 20%, and probably their forecast is probably about right. Something like 10 to 15% is probably a good guess, in my opinion. It says, along with Zillow, Goldman Sachs is very bullish. The investment bank foresees home prices climbing 16% by the end of 2022. Meanwhile, Fannie Mae expects growth to remain fairly strong, predicting 8% growth next year. But there are some 2022 housing bears. Look no further than CoreLogic, which is forecasting just a 1.9% price growth over the coming 12 months. That's a bear, saying that home prices are going to go up 2%. Mortgage Bankers Association, which is actually forecasting a 2.5% price drop by the end of 2022, is what they are saying. If Zillow's 13.6% prediction turns into reality, then the 2022 housing market would also go down as one of the hottest on record. It says, why are the 2022 housing forecasts all over the place? It all boils down to two big unknowns. The first unknown is whether supply chain issues and material shortages will worsen in 2022. If they do, that could slow down home building and reduce supply. The other uncertainty is how high the average 30-year mortgage rate will rise next year in the face of stubbornly high inflation. Higher rates, of course, would lock some buyers out of the market altogether. Fannie Mae predicts it will be 3.4% by the end of 2022, while the Mortgage Bankers Association predicts 4%. To a large degree, that explains why the Mortgage Bankers Association price forecast for 2022, a drop of 2.5%, is so bearish compared to Fannie Mae's price jump of 8%. It's unclear what mortgage rates Zillow price growth model is inputting. However, their research noted elevated inflation heightens the risk of near-term monetary policy tightening, which would result in higher mortgage rates and weigh on housing demand. As a result of all economic models, buyers and sellers should take real estate outlooks, including Zillow's, with a grain of salt. After all, at the onset of the pandemic, both Zillow and CoreLogic forecasted that prices would fall. Not only did prices continue rising, they went on a record run. There's another potential reason for skepticism. Earlier this month, Zillow announced it'd close its home flipping business, iBuyer admitting it was neither good at scaling flipping nor forecasting home prices. Zillow CEO Rich Barton was blunt in his assessment of their price forecasting shortcomings. And then right here, so that's what I've been kind of discussing here. What I also said in a lot of my responses is that the largest real estate booms have happened under increasing interest rate environments, which were highly inflationary. So if we have this highly inflationary environment, I would suspect that rates would go up. Even real estate prices will continue to go higher. We have not seen real estate prices go higher under a declining interest rate environment outside of some sort of weird one-off thing. So the demand for real estate is there. The supply is not. So what I think is that we are going to continue to see demand for real estate remain robust until we see it doesn't. And with inventories where they're at, which is super low, I'm going to continue to remain a bull until inventory gets, basically replenished. And if the inventory remains low, what that means is that the interaction between the buyers and the sellers are resulting in no inventory, which means we have more buyers than sellers. And that's what pushes home prices higher. And I go over this and do updates on this analysis of the real estate market and looking at inventory and looking at days on the market and all this stuff each month when they release the information. I will be a bull until the inventory goes up over 6 months. And if we go up over 6 months of inventory, then we have the chance to go down. Otherwise, we're going to continue heading higher. My guess for next year, we're going to go up something like 10, 13, 14%. That's probably my guess of what I would guess. If it ends up being 8%, then it's 8%. I do not think that we have a chance of going down any material amount because we don't have the inventory to do it. Basically, you'd have to have some sort of something would have to happen where inventory floods the market. And if that happens, then we can see it in the inventory numbers and we would make our adjustments. But we haven't seen it yet. Therefore, I remain a bull. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.